Ma'am, you
Uh,
are starting with a new topic right now.
I'm starting with revenue. That's a fresh topic, new chapter. Okay. So the revenue is IFRS 15. If you realize revenue comes in your PL, and at what position does revenue come? Which line is it? Can you all tell me? Which line is it?
Profit and loss account, the first thing.
Yeah, the first
First
line,
part.
profit and exactly. PL का first line is revenue, okay? And if you realize PL में that largest item, अगर कोई largest figure होगा, that will also be generally revenue only. Revenue के पास जो भी items है, they are of course normally smaller than that, right? The entire income generating line is the revenue line. The other income generating line like other income, investment income, they are not the major source of income in your business. They are the side income. Revenue is the major source. So that's why it's the single largest important line. Okay, one of the single largest important line. That's why a dedicated standard over it, because an error in this line, a manipulation in this line, okay, could lead to a significant change. Okay, it could hamper the true and fair view of your financial statements. So there is a proper standard on it. Now there was an earlier standard on revenue as per international accounting standard, the IAS. There was one more old standard, but when that was being practiced by industries, okay, over the globe, they realized that जो feedback आ रहा था, they were realizing कि बहुत fraud हो रहा था. So using that standard, many manipulations were possible. Okay, that standard was not somehow acting as a deterrent in not doing fraud. Okay, so there were many loopholes to that standard. That's why IFRS 15 revenue came in picture, because they wanted to give a very strict approach. They're catering many situations. That is, if situation A happens, this is how you'll account for it. If situation B happens, this is how you'll account for it. They are closing all the gaps, all loopholes from which there is a possibility of cooking the books. Okay, cooking books as in doing fraud, right? Manipulating your figures, showing favorable figures. If you want to show loss, you'll probably show lesser revenue. If you want to show higher profits, okay, to the investors and all, you'll show greater revenue. So this control is not in your hand, okay, because of IFRS 15 now it's not in your hand. You have to follow a very strict approach, okay. So IFRS 15 is about that now. Now what's the strict approach? When can you recognize revenue? You can't instantly recognize revenue. There are steps that has to be fulfilled. Okay, so step 1, step 2, step 3, step 4, step 5 are catered. Then you can record a revenue in your PL. Okay. So what are these steps now? I, P, T, P, S. It's a mnemonic. This mnemonic makes it very easy to remember everything. I meaning identify a contract. Okay. So of course, before you can record a revenue, you realize that there should be a contract. Okay. Contract ke liye, again there are prerequisites. What is a prerequisite for a contract? There should be two parties, just two party in a room, or two parties anywhere in the world doesn't mean that you have a contract. These two parties should be in agreement regarding something, not just again regarding an agreement with something, regarding an agreement with a commercial thing, right? A commercial service or a commercial product being exchanged between these two entities. Again, not for free, for a price. Okay, so contract meaning there should be two parties, they should be in agreement regarding a commercial commodity or a service for a price. Okay, there should be rights and obligations attached with this contract. All this, there should be intent of payment, there should be a hope that this payment is going to be received. So I have entered into the contract, everything is being fulfilled, but I kind of know, I have a strong vibe from day one itself that this party is not going to pay me, because probably it's not a solid company. Okay, and probably I'm like 80% sure this company won't be able to pay me. In that case, you can't record the revenue. It should be probable, that is a higher chance should be there that revenue is going to come from this particular company. In that case only you can say it's a contract, and then only you can recognize revenue. So first was identifying a contract, and what contract for contract to be in picture, I already told you what are the prerequisites. Okay, now After this, you have to identify different performance obligations in the contract. Okay, I'll read. You have to identify different performance obligations. Okay, so there could be a contract, but in that contract, there could be many other things also, okay, which is to be fulfilled by the other party. For example, if there is if you've purchased a air conditioning system for your house, that selling entity is going to give you that air conditioning system, but along with that, it is giving you servicing, okay, and servicing is for say 3 years, okay. So you have to identify that that contract is giving you two things, it's going to deliver you two things. One is an AC, that physical commodity, and the other is a intangible thing, a physical service, which you're going to get over a period of 3 years. So you have to identify separate different items, okay, this is important. If you don't do this, then there is a possibility of fraud, because if you have not identified the elements, then how do you allocate the price to the elements? Okay, so it's very important to identify the elements. So P say identify different performance obligations. Okay, identify different performance obligations. T, identify the transaction price. Before you can record revenue in your books, it's also important that what is the transaction price of that contract is identified, okay, earlier. I mean, before you can record a revenue for it, of course. So that's T. Then again a P, allocate the transaction price to different performance obligations. Now, I told you that things came in a bundle, right? You got a AC, you got a 3 year service, you're paying probably $2,000 for it, or for this combined package. But you have to identify कि physical AC के लिए कितना price है and for the 3 years का service कितना price है. You'll have to segregate it. Okay, that's important. So allocate the transaction price to different obligations. S, record revenue when performance obligation is satisfied. That is, whatever was your performance obligations, whether it was delivering the air conditioning system or whether it was giving the servicing part of it, whenever this performance obligation is satisfied, you will then be allowed to record the revenue for it. Okay, so these are the 5 steps. Now in this 5 steps, within each step also there could be certain variations, there could be various cases. That's what IFRS 15 is trying to cover, that various cases if encountered in the real world, how do you account for it? Prescriptive approach. For everything there is a rule given. Okay, so you all can make a note of this, then we'll proceed.